Hi there, my name's Robin and I'm a product manager at Brixx. I'm going to give you a demonstration of the software today, showing you what makes Brixx unique and giving you a tour of the features of the app. We'll build up a simple plan so that you can grasp the core concepts behind Brixx, and then take a look at some plans I made earlier. First, I should introduce you to us. Brixx is a financial modeling tool designed to help businesses plan for the future. We believe in making financial models accessible, flexible, and testable. But what do I mean by a financial model here? You've heard of a financial plan, but a financial model is something that can be used to build multiple plans, multiple outputs, and multiple scenarios. It's a picture of a business, something that encapsulates all of the financial activities that a business performs in one cohesive whole that's easy to understand and ask questions of. So without further ado, let's get started. I'm here at the moment on the Your Plans screen. This is what you'll see when you log into Brixx. Here are two plans that I've made earlier. We'll have a look at those in a bit. I'm going to start, as everyone does, making a new plan here. And I'm going to start by giving this a name. Now, I'm just going to give you an example here as we build this up. The first business I was involved in was an audiobook business. So I'm just going to call this audiobook business. This name is going to appear at the top of the reports of the plan and any downloads that you make as well. So the next thing I've got set here is the start date of my forecast. I'm going to set this to the start of 2021. And I can also choose the duration of this forecast. It's 3 years at the moment, but I could make it up to 10. Let's just keep it at 3 for this example. Tax system here I'm going to leave off, but I can set the plan to automatically calculate VAT, sales tax, or GST. I want to keep the numbers really simple today, so I'm going to leave that off. I'll leave the currency here as pounds, but we have a number of currency symbols you can apply to the plan here. And finally, there's this tick box. Start with a basic plan template. Now, I'd recommend that you do this and keep this ticked if you're building a plan in Brixx. It adds some structure to the plan to begin with. But as you've got me here today, I'm going to turn it off and we'll just build up something from scratch so that you can see how it works. Alright, with that done, I'm going to click Create Plan. While that loads, I'll tell you a bit about the example we're trying to make here. In the audiobook business that I was involved in, we bought the licenses to audiobooks from publishers for a fee, and for each audiobook we sold, we paid them that fee. We got cash directly from our customers, who were normal consumers. So that's what I want to set up here, just receiving income from customers and paying a fee to publishers. And we'll probably get into a few other bits and pieces with assets and loans as well. Alright, so this is the main planning screen of Brixx. On the left-hand side here, in this dark panel, this is where you build up the structure of your model. We use sections and groups as containers for components that are the building blocks of your plan in Brixx. But I won't get ahead of myself. Let's see it in action in a moment. On the right-hand side are the outputs of the plan. This is a financial dashboard at the moment. You can see it's got a number of charts here. We've also got reports, cash flow, profit and loss, and balance sheet, and a timeline, which we'll get to in a bit. Okay, let's head back to the dashboard. I'm going to start here by adding a section. This is a bit like a folder in Windows, a container for other items in the plan. And you can name these however you wish to make it unique to your business. So the first section I'm going to add is going to be sales, something that's probably common to a lot of business plans in Brixx. I'm now going to add a group. And in the audiobook business, we divided our sales by publisher. So I'm going to call this publishers. Now, as soon as I've added this, I get the option to add these components. These, as I said, are the building blocks of the plan, and each one encapsulates a certain financial activity. An income component, for example, adds a source of income to the plan, but you can also use it to calculate things like tax payments on that income, number of units that you sell, and so on. More complex components include things like assets, which we'll add one of later, which add the purchase of a physical item to the plan, and also handle any depreciation of that item and any sale value if you wish to get rid of it. For the moment, I'm just going to add an income component here, and we'll start building up this picture of the business that I talked about at the start, a picture that you can understand no matter how you come to it. So I'm going to open my income component here, and you'll see I've got a lot of options here. I can fill in data. At the top, I've got the name of the component. I can rename this one of the publishers that we were involved in, one of the larger ones, let's say Random House. And I can choose when this lasts. I'll show you that in a minute on the timeline. But what I've got here now is a choice between how I enter this income, whether it's entered as an income or an income per unit. So I could enter an amount of income for each unit that I sell, or just an amount of income that I forecast to receive. I'm going to keep it simple and just choose income here. And let's say that I receive £1,000 per month from Random House. I can also delay when this income appears on my cash flow, and I'll show you an example of that later on. I'm just going to save now and show you how this flows through to our dashboard and reports. So you can see just by adding this information, I've started to populate our dashboard here. I've got figures coming through to sales each month, and I've got this cumulative cash line that's increasing. I've also started to populate some of the large numbers at the top of the dashboard. I'm looking at the moment for the period of 2021, the whole year, and so as I'm generating £1,000 a month with this Random House audiobooks publisher here, I'm generating £12,000 a year. Let's take a look at how this affects the reports as well. Okay, so on the cash flow, I've got cash received here at the top, and my cash is being affected by Random House Audio, what I've just put in. If I want to drill down and see where this information is coming from in a large plan, I can do so by clicking on this arrow next to cash received. First, I'll see sales, and this is actually the name of the section here on the left. When I drill down again, I see publishers. And finally, when I drill in further, I see Random House. So this structure here in the report mirrors the structure that I've built on the left-hand side of the plan here. This makes it very easy to interrogate reports in Brixx, as underneath these top-level account headings, you'll be able to see the structure of the plan that you have built and you have named. Okay, so this is the cash flow report here, and it's filling out our operating activities, our income list payments, and giving us a closing bank position that's increasing by 1,000 each period at the moment because there's nothing else going on in the plan. Just as an aside here, I'm looking at this report at the moment in months. I can also look at it in quarters, or I can look at it in years. This is just a touch of a button to change the report view. I can also look at different periods of the report. I can look at the first year, the second year, or the third year. These are controls that are common to all reports in Brixx. Let's go to the profit and loss next. Here you can see I'm getting revenue through from this income component, and again if I drill down I can see exactly where this revenue is coming from. It's also starting to fill out the operating profit and net profit for the business. Finally, on the balance sheet I can see I've got surplus cash each period and also retained profit. Now this is quite key. In Brixx you'll have seen that this income component is doing all the double entry that's required to keep this balance sheet balanced. And this is something that is quite interesting and unique about Brixx. It will always do the double entry for you, ensuring that you have a balanced balance sheet. The only way you can become unbalanced in Brixx is by changing your opening items to something that's unbalanced. But as long as you're forecasting the future, Brixx will always handle every side of the financial reports for you. So let's add another component here. In Random House, I'm going to add something that's called a child component in Brixx. I'm going to add a cost of sale that's associated with this. So I just click here and it's added as a child of Random House. Now this is the payment that we're going to make to the publisher. For each audiobook that we sell, we pay 40% of that revenue to Random House. What I'm also going to do here though, to make things a bit different, is add a delay. So I'm going to add a 1 month delay to when we pay this cash. Let's say that we have an arrangement with the publisher where we sell their audiobooks 1 month and then we actually pay them the sum the next month, perhaps to ensure a correct count of the figure that we owe them. Alright, let's save and close, and we'll go to the cash flow. So, the cash amount that I'm paying is £400, 40% of £1,000. And you can see that in January I don't make a cash payment. This is because of the 1 month's delay that I put on the cash payment. If I drill down here in cash paid on goods and services, you'll see the sales section, the publishers group, Random House, and underneath it the cost of sales component that this figure is coming from. Let's go now to the profit and loss as well and take a look there. Okay, so we can see here my gross profit is being affected, but it's being affected in the first month. What's going on here? Well, the profit and loss is taking into account the cost of sale happening immediately. It's only being delayed on the cash flow because we recognize this cost on the profit and loss when it's owed rather than when we receive the cash. Finally, let's have a look on the balance sheet here. We'll start to see accounts payable coming through because in January we owe £400. I can see where this is coming from in the plan as well. It's coming from sales, publishers, Random House, and the cost of sale component underneath Random House. Alright, if I just scroll down to the bottom here as well, you'll see that our balance sheet is still balanced. Okay, let's head to the dashboard and just see how this is updated. You'll now see a cost coming through on this cash flow chart at the top each month, except for the first, because we're delaying that cash payment. Alright, we're starting to get a bit of a picture of how this business looks. Let's add in another publisher and see how much this changes our plan. So I don't need to go through and add these components again. I can just select them and copy them. And we'll rename this Random House one to Blackstone Audio. This was another of the publishers that we had to deal with. And let's say that in Blackstone Audio I forecast to receive £2,000 per month, and in the cost of sales component we pay them instead of 40%, 30%. I'll keep that 1 month delay there as well. Alright, let's save and close. And let's have a look at the reports. So, on the cash flow report, at the top you can see I've now got more cash being received and more being paid. If I drill in though, you can start to see the sections and groups we're building up come into action. Now when I drill down I can see both of my publishers here and I can see the difference between them. There are a few other tools that I can use to test things in Brixx. For example, if I want to see how this plan looks without Random House, perhaps the deal with them doesn't go through, I can turn Random House off, and this will recalculate my reports immediately to just include the information from Blackstone Audio. And you can do this with any component or group or section in Brixx. Just turn things on and off to test scenarios. Alright, next let's have a look at the timeline. In Brixx, everything sits on a backdrop of time. All components, all groups and all sections take place at a certain point in time, and this is to make it like a real-world business. Every financial activity in a business happens at a certain point in time, and if we're forecasting the future, then understanding when things happen and the differences that can be caused by things happening earlier or later is critical. I can change when things happen in the plan just by moving these bars on the timeline. So let's say that our deal with Blackstone Audio here doesn't go through until 2 months have passed. Let's say that I don't actually get the option to sell Blackstone audiobooks for 2 months after the start of the plan. Let's see how this looks on my reports. You'll see immediately Blackstone Audio has crept 2 months into the future here, and so has the cash that I'm paying for my supplier. That's gone into the 4th month of the plan here. The component starts here, the cash is delayed 1 month, and so we make our first payment to Blackstone Audio in April 2021. Alrighty, let's just add a couple of other components here, and I'll show you how they fill out the reports. First of all, we're going to add an asset, something a bit different to what we've been looking at so far, but something that's important to the business. Brixx doesn't just produce a cash flow or a projection based on cash. As you've seen, it also has a profit and loss and a balance sheet. And this is why things like assets bring out a full picture of the business. So I'm going to add a new section here and call it Assets. And we'll add a group, and I'll just call this Office Equipment. Now, you could name this whatever you like, of course, but in this instance, I'm going to model adding some computers to the plan. These are what we require to do our business as a digital audiobook company. So I'm going to add an asset component here and rename it Computers. Now, let's say that they cost us £10,000 to buy all the computers and equipment for this business. And I'm going to add in some depreciation as well. You see, I've got a few other options here that I can do, but let's just add depreciation for the moment. And let's say that they depreciate at 40% per year, just for example. And I'll save and close this. So what do you expect we'll see on our reports? Well, in the cash flow, in the first month, we see the purchase of this asset, £10,000. Again, if I drill down, I can see the section that I've added, followed by the group that I've added, and then the name of the component itself that's generating this figure. Alright, let's have a look at the profit and loss. We'll see depreciation coming through here on the profit and loss. You can see the total here is 4,000 for the year, and that's being divided monthly here. And again, if we drill down here into assets, office equipment, and computers, we can see the source of this depreciation expense in the plan. Okay, and finally, on the balance sheet, we've got a fixed asset line now at the top, and this is the end of day value for this asset each month. You can see it's declining here as we apply depreciation to this asset. Scroll down to the bottom, and you'll see that we're still balanced. But what we do have in the plan now is some short-term borrowing. Brixx is assuming that we have the cash to pay for this asset, and it's using that information to balance our balance sheet. So we're going to need to put in some funding of some kind in order to purchase this asset. Another financial activity that we'll add to the plan. We can see this very clearly on the dashboard here. In January, I have a very large cash expense from this asset purchase here. Alright, and I can see my funding requirements are up here in the top right. So I'm going to need to add some funding to the plan in order to be able to afford this asset. Otherwise, I'll go bankrupt immediately. So I'm going to add a new section here, and let's call it Funding. Funding. And we'll add a group. We'll just call it Funding Group. And a loan component. The loan component allows us to borrow money and pay it back over time, adding interest to that payment as well. So let's say I borrow £10,000, and it'll be a 5-year loan, and we'll set an interest rate of 5%. Let's save and close. Okay, so you can now see we don't have any funding requirements anymore, and the dashboard's looking a lot more healthy. Our cash line here is rising throughout the course of the plan, and our other charts have started to be filled out as well. We've got a cost breakdown chart here showing the split between capital repayments, interest paid, cost of sale, and our asset purchase. And down the bottom, we've also got an asset chart that's increasing throughout the plan and showing the difference between the amount of asset value we have from our computer equipment and the growing value of cash in the business. Okay, that takes a look through a lot of the functionality that I want to show you today in this very simple plan. Now I'd like to show you some more complex plans that I made earlier, just to show you how this picture of the business that we've built here on the left allows you to very quickly assimilate information about your business. So I'm just going to go up here and back to the My Plans page, where I've got two plans that I made earlier to show you. The first of these is a demo of the full audiobook business that I was involved in. So let's take a look at that. Alright, so we're here, we've got a lot more complex information going on, and we've got a new line on the dashboard here. This is Actuals, and this is one of the tabs at the top that I hadn't showed you so far. If I click here, I can start to enter actual information for how my plan fared against my forecast. So by the time I get to February, I can start filling in February's information. And when it gets to March, I can fill in March's information for how much I made from each of these sources here. This is the same for each of the financial reports. We've recently developed an integration with the accounting platform Xero, which will pull across this actual information automatically and hold it against reports in the plan. I'll show you how this looks right now. So if I go to the cash flow with Show Actuals turned on here, then against each of the publishers, I can see how much I actually did in this column here for January and how much I forecast, with a variance for each. This is summed up when I minimize the cash received line and broken down if I drill down into sales channels and publishers. On the left, you'll also see that I've fleshed out this plan with a lot more components and sections. I've added staff here, I've added some marketing costs, and I've also got this section at the bottom which is called Expensive Shows. Now, you might have noticed when I went to my dashboard that this plan isn't actually doing so well. It has a pretty negative amount of cash right here in the middle of the first year, and unfortunately this reflects the reality of the business I was in. We paid some very costly shows near the start of the business, which didn't really generate that much revenue in return. So I'm just going to show you an example of a quick scenario. If I turn off expensive shows and all of these expensive items that we purchased, all of these expensive hotels that we went to in order to attend this show, if I turn all these expenses off, let's see how this affects my dashboard. Well, we can see immediately that though I do start to lose cash throughout the first year, it isn't so detrimental. I don't go into a negative amount of cash here. Alright, let's have a look at one last plan to show you another example, and it's a demo of a generic SaaS business, a software as a service business. I just want to use this to show you how you can use these components to build up very different kinds of business. You see here I'm looking at a SaaS HR platform as the example business, and I've added annual subscriptions to this platform, monthly subscriptions, pre-existing service agreements with other companies, and I've added a lot of detail here into employees as well, especially on the timeline. So I've staggered when I'm going to be hiring new people, and I've been able to add in my existing development team and the management team here at the top as well. In my reports, I can see this in my profit and loss and cash flow. Here under staff costs, I've drilled down already so you can see employees, and then management split out, the customer team who are gradually hiring throughout the course of the plan, and the development team down at the bottom. Alright, I'll just head back to my cash flow. So, I've shown you a lot of different features of Brixx here now, and if there's anything that I've missed out, or if there's anything that you particularly want to ask when you come to build your Brixx plan, then I'd love for you to get in touch. Just go to Brixx.com and get in touch with us there. Alright, thanks very much for watching everyone.